All right, welcome to another Futures Initiative Trading Recap. Tonight, we got Dubster, Akshay J, and Lucas. We got the core squad tonight. And today we had some very interesting price action. It's very one direction. We had a little bit of downside, but outside of that, there was no downside really to be seen. But before we dive too far into that, Dubster, let's go ahead and see the trades of today.
Awesome. All right. Go ahead and move this guy here because I actually recorded this trade here. I want to talk about this specific. So I was actually in with two contracts. I had already trimmed at this specific location, but during this section here, let me go ahead and bring down. Where's the volume right here? There you go. When all of this was happening, let me leave up the speed. There you go. I was really hoping for the low of day here to actually break and hold. But when this happened here, we noticed that we came down with a lot of momentum. So I was actually really happy about that, right? It was like we broke this low. We had broke the previous low. We were currently at an order block over here. So the question here was, were we going to come into consequent encroachment off of this, reject, or were we actually going to break and then hold? So I was actually looking for 100 ticks. The most we got out of this was 94 ticks. So I did not get to trim. I was also looking for consequent encroachment off of this specific wick here. So let me go ahead and move on over here. On that specific trade, it was this guy right here. We came down and I really wanted to close below the line. So if I erase this, there's this line right here, this low, that I really wanted to close by. And we never actually got it. We came down into this specific fair value gap and it was just so strong the whole time. It grabbed it here, grabbed it there. It just grabbed it multiple times and not once did it actually break, you know? So the fact that we never broke these lows made me feel like very sketchy about how things work, because at the same time, when I was in this trade, and I'll talk about my entry and everything in a bit, I want to go ahead and mention ES was actually chopping the whole time. So instead of ES actually coming down, it was going in an upwards movement. Like it had a lot of bullish momentum, right? So at this specific time, I was just looking back and forth at ES and I was trying to figure out why Enki was going down. But then it started chopping here. And when there was chopping, ES was just chopping sideways. So it was very, very difficult to understand. So just a little background on this entry here. The reason why I took this position here was because we actually broke the low. So, Jesus. So what I did here was we were currently at highs. And the reason why we were currently at these highs, or what I really wanted out for this buy sell liquidity, was 460. Did I erase it already? Oh, man. I erased it, but it was somewhere around 470, 469. Those are the highs that I really wanted because those are previous highs from a couple months ago. And I was thinking about how it might grab that buy sell liquidity, then come back down, break the lows, and then from there die, right? Because we have massive wicks down here. So what I did here was had these lows here. We knew that we came down with so much momentum, leaving a fair value gap behind. I drew the low here. When we broke below the low, we closed below the low, and we left a fair value gap. Meaning that, hey, we have a lot of momentum, sellers are coming in, so most likely the chances of this actually rejecting to the downside are pretty much high, right? But we can also not ignore that it is a risky trade due to the fact that we do not have a market structure shift, not until we break a nice either external low, which would be this guy, or this guy right here. That's when I will consider a full market structure shift. However, due to the fact that we did die with a lot of momentum and we broke this internal low swing here, I went ahead and I entered a consequent encroachment, and then entering from consequent encroachment, my stop loss was above the highs, which means that if we wanted to go higher than this, it was just gonna skyrocket, right? The tick wise, 42 stop loss tick, that was not bad. So I went ahead and went in with 2 minis. It's normally 50 to 100 ticks, but the fact that it was 42, I just thought it was a decent stop loss. I wasn't too worried about it. My target was the new break of structure, which was this low here. And then from there, what I really wanted was this wick here. We did not grab. We were at a fair value gap here, and it just never died. So this was just very mysterious day today. Price action was pretty weird. We did take this trade, and this was just a beautiful trade here. We caught over 94 ticks. However, I did take full profits at 50 ticks, 57 and 50 ticks. So with 50 ticks in total. The next trade that we took is this guy down here. So in the morning, we almost got stopped out here. So I had my stop loss at the consequent encroachment of this fair value gap here. The reason why I did not ignore this fair value gap was because it was a massive one. It was the one that broke pretty much this whole trend's bottom structure. The reason why I entered here was because the candle that broke these lows closed below, and it actually did leave a fair value gap. So my rule is that between 10 a.m. to 11:30, 11:45, the first break of structure to the downside that breaks and closes below the line and leaves a fair value gap behind, I'm going to go ahead and enter, right? That's the rule that I have. And don't be fooled. There is a fair value gap right here. And it's not a lot. It's literally just 2 ticks, 3 ticks to be exact. That's all it is. And believe me, it fucking works, right? So I've talked about it in other recaps. Do not ignore these fair value gaps. Also, do not ignore these fair value gaps. So play against yourself. So that's exactly what I did. I entered some contracts here. I ended up entering some here, and I entered my final position up here. Even though my stop loss was a consequent encroachment the whole time, my average ended up being up here. Profits, we were up over almost 140 ticks, which it was 40 ticks, but I took profit at 50 ticks. I took profit at 100 ticks, and I never took profits at 150. So unfortunately, I did get stopped out on this trade. I break even for my runners, but this was a very amazing trade. Very tiny fair value gap. The rule was respected, broke the lows, closed below, left the fair value gap, and stop loss. It's always 5 to 10 ticks above these the fair value gaps candle. As you guys can see, 37. So the rule would have been at 47. We would have never been stopped out, even if we follow the rule. However, due to the fact that it was a tiny, went ahead and I accepted this risk. But due to me accepting this risk, I hedged against myself, and I actually went with lighter position size. So even though I did go in with lighter position size, I did take it on my PA. I went in with 4 contracts, and that's how I ended up taking this trade here with my PA account. So these were the 2 trades I took here on NQ. I want to talk about the gold trades I took today. This specific trade, I took 2 different trades here. Well, the same trade, different entries, however, 2 different accounts. So I took one at 192 and 1 at 993. So I was just a little late, but not because I entered here. Let's say, for example, I entered here and then I went to my other account, then I entered up here. It's just the fact that we came down here to this specific area. I was really hoping that we came and grabbed this consequent encroachment here. Actually, let me go ahead and show you guys what I mean. So this is how I draw my limit orders. We have here. We know on the bigger picture, we came down aggressively in this specific trend. But at the same time, when this trend took off, it took off a massive external, which means that when price action comes back down to this final fair value gap here, it's most likely going to be respected. That's how I play these trades, right? So what do we have here? We have a drop, massive drop, and it came down to the final fair value gap that took out this external high. And then from there, we ended up coming here and then we took off, right? However, there is something very important here. There's a fair value gap here that is a 5-minute final fair value gap, but it has been mitigated. So if I were to show you guys, we have a 5-minute fair value gap here. Go ahead and delete this on this specific section here. And we don't have anything else over here, which means that if we were to break these lows, it's going to want something more important on the left side, right? But in this case, we know that this final fair value gap already got mitigated based on the rules that I play. I would not play this final fair value gap here. But the reason why I still entered here was because there was nothing down here and we had a liquidity, sell side liquidity here. So the reason why I entered here was because we have this guy that has not been mitigated, which means that price action is normally going to want to come to consequent encroachment and then take off, right? So I'm going to go ahead and draw this line here. I'm going to put it as a green entry. And we're going to go ahead and drop into the 15 minutes. Now, the confluence here is like, why would I want to enter here if we have a 5-minute final fair value gap that's already been mitigated? So the answer to that was when I asked that question to myself, say, you know what, consequent encroachment off of 15-minute fair value gap has not been met. However, there is a 5-minute consequent encroachment sell side liquidity wick that has also not been mitigated. So what I did was I entered a consequent encroachment off of this liquidity wick due to the fact that it was before the 15-minute fair value gap, but I never let go of this guy. So what I did was I entered a contract here, and before I even entered here, I actually had my limit order at the bottom of the fair value gaps consequent encroachment. This is where I really had my fair value gaps limit order. While I was taking the other trades, this guy has never got hit, and I was paying close attention at gold. Knowing the fact that we were just chopping around this area, I went ahead, I ended up moving my limit order to the top, consequent encroachment, and I moved my stop loss to the bottom part of this fair value gap. So we're going to go ahead and draw a red line here, just so you guys know what consequent encroachment off of this 15-minute. And remember, the higher time frequency gets respected more off the 5-minute or the lower time frequency in this case. But moving on to this section over here on the right side, what do we have here? We have that the green line is consequent encroachment of the sell side liquidity wick is off the 15-minute and off the 5-minute, meaning that we have two confluences here. What else do we have here? We have a red line here, which means it was consequent encroachment off the 15-minute fair value gap. However, off the 5-minute fair value gap, it was already mitigated, so we know that the 15-minute is stronger than the 5-minute, right? So what I did was drop down to the 5-minute. I wanted to pay attention to how price action was reacting in this specific area. Came down here, made a doji candle. As soon as I saw this doji candle, I was pretty much intrigued here. I really liked this area, and we took off, right? When we took off here, I actually ended up entering somewhere at 193. So I entered my first contract here, and I put my stop loss right about here. I did a couple ticks somewhere around here. So that was my first entry. As price action was playing around here, break even, we came down all the way down here, and we still failed to go higher. So when this guy closed up here and went back up, on this specific candle, I ended up entering at 194.4, somewhere around here. So the reason why I entered here was because consequent encroachment was being respected this whole time. We had a doji, we had a nice push up, came back down, we still failed to close lower, meaning that we failed to close below these lows. That means that price action is normally not going to want to come lower. But as always, we do not ignore this consequent encroachment entry here. So I did play with it, did a couple ticks below it, and my target was a new break of structure. Now, why do I like this to the upside? The reason why I like this to the upside is because all we've been doing this whole time, we've just been dying, right? In the past days, the last week at least, we've just been dying the whole time, which means that today, during Tokyo, London, all we did was die. Pre-market as well. Die, right? So at this point, there was a need for retracement. So you have to figure out what specific areas is going to want to retrace from, and that's exactly what we did. I ended up taking the risk here. I took the risk, tight stop loss. I mean, the lows were somewhere around down here, but I still took it at these specific areas due to the fact that it was rejecting off a consequent encroachment. My limit orders were down here at first, but as you can see, I would have never taken this trade due to the fact that it actually never grabbed the consequent encroachment, but it did bounce off the 15-minute fair value gaps here and still grabbed the consequent encroachment off of that liquidity wicks. So that's the reason why I went ahead and took gold. I ended up taking profit at 50 ticks here, and then my runner actually got stopped out somewhere over here. So I just got annoyed with the trade. I was in for quite a while, a very, very long time. So I got annoyed and I took off profit somewhere around here. As you guys can see, Price action did go higher. I was aiming for 2,000 the whole time, but we never got it till after hours, right? Or till today, in this case. But those were the trades I took today.
Very nice. Very nice. Yeah, there was a lot of weird price action today. It was difficult to kind of really get a solid entry because everything kind of seemed a bit out of place.
Yeah.
Like wicks were going much further than we had expected, had anticipated. Trying to find consequent encroachment that would turn to be like the entire fair value gap instead, or even more.
Yep.
So, good on you for being able to take trades, being able to stick with it, and continue rolling with it.
Thank you.
Definitely ES was the ticker to trade today. NQ was on a planet of its own.
See, the thing with that is that ES also did not respect a lot of things.
Right.
So that was very difficult.
NQ was the worst offender.
Yeah, that's true. Well, because like here on NQ, there's a fair value gap down here, right? But then we had wicks here. We had a fair value gap up here and here. But during this specific section, we didn't have a lot of chop other than on top. On ES, we had nothing but chop the whole time. So when it broke down here, the reason why I took my trade on NQ and not on ES was because when it broke this low here, this candle never closed below. So I automatically mitigate this guy, right? I ignore this guy and I take it on the stock, whether it's going to be NQ or ES, whatever has the confirmations of when I take the risk on, right? Even though this was a profitable trade, to a couple of ticks above, this would have still been a profitable trade. But due to the fact that it was choppy, no fair value gap down here, other than the wicks, it never even met consequent encroachment over here. Actually, I pretty much ignored everything from ES and then the divergence that we were having. Because even though this thing was going up, look at the way this guy was moving compared to ES. Like this thing was going up, and then this guy was coming down while NQ was still going up. Like NQ just fucking went up nonstop, right? So
yeah,
the divergence today was nasty, and then specifically in this specific area here, the same thing. Look at this. Like ES never really dropped. So, even up to now, this is funny. It's very weird. So price action today was shitty. It really was. I am actually surprised we ended up green on the day. But definitely one weird day. If you were your bias was short today, was bearish, we pretty much got fucked because we only got this drop here and then we got this drop here on Enki, and then other than that, every stop loss got eliminated.
I swear, if I held my trade from this morning, I would have caught the entire range, like top and bottom of today and of the Asia session.
Yeah. I mean, just pre-market it was shitty too.
Oh yeah.
Look at
yeah. Well, I don't know. I kind of liked it. Not gonna lie, I did.
No, fuck that. I have no entry on none of these.
Ah.
Not a
But we
single
just
entry.
have to look to the left and we'll find said entries.
Nope. Not a single entry. Well, but those were the trades I took today, guys. In reality, this was literally the only A+ setup, and this is the only one that I took on my PA account. Every other trade I take them on evals. Reason why is because it's one specific setup, one specific strategy. That's the only trade I take. Win or lose, I take it, and that's the way I move on, right? So I have one specific account for this setup, and then I have other strategies that I also play for my other PA accounts. But for today, that was the only PA account trade that I had. The other ones are different strategies that I'm currently working and tweaking at the same time.
Absolutely. We're always working to back test what we already do and what we are wanting to do.
Yeah.
So fantastic trade. Awesome. Awesome. All right. So go ahead and go.
Actually, were you able to stream or not yet?
No. And I don't
Yeah.
know, I did log in with my trading view, but I cannot see my charting because it's a different laptop, that's why.
No, because you need
Huh.
to use it doesn't work that way. It links to an account.
And then I did log in with the TradeOvit also, and then I cannot able to see my today's trade. It says the same balance, but in the notification I can't able to see anything.
Go
That's
to
weird.
orders. I think TradeOvit there's orders on the right hand side, the one with 3 bars. Set your time range on your order history and click go. You should be able to see some trades.
You mean on trading view under
TradeOvit,
TradeOvit, right?
TradeOvit. Yep, on TradeOvit.
I did see my balance.
Just to add on with Dub, I'm surprised you went in for the longs of gold.
On gold?
My bias for gold for yesterday was shorts. The only reason why I went negative was because I doubted myself.
Rip.
Yeah,
When
but
that
in
happens-
general,
Died.
Yeah, dude,
yeah, but in general, I was in shorts. Yeah, so I got it from the end of the daily fair value gap to the other fair value gap. That was or at least somewhere in the midpoint. That was my trade for the day. I took multiple trades because I went in on 1 minute each time. So
Jeez.
when he went against me, I cut and I re-entered again.
Oh, so you were trim on the reverse, so you just get back in.
Yeah. So I rode it all the way to the daily fair value gap at the bottom.
Okay.
That's what I did.
You want to go ahead and
So-
stream Contestic?
Sure. All right. What do we have here? This over.
Shorts.
Oh,
Shorts
right.
on gold from Lucas. So
Short on gold.
how many? Wait, sorry, Contestic. How many shorts trades did he take in total?
I lost count actually.
Quite a
But
bit.
all I know, I went from negative 250 to positive 175. So I'm not really complaining. So
Yeah.
essentially, I got 40 ticks of profit, thereabout. My plus 37 ticks in total profit.
Not bad. Your analysis was on point then.
Yeah, the only reason why I lost money because I did not trust myself.
Does that mean because you were in with just one mini? Or-
Yeah, it was because I was in with 1 minute, so it's a bit harder to do more trade.
Have you
That's
tried
fine,
doing the micros?
Not yet, cause I drew everything on the mini. I was like, might as well just go it on the mini side.
That's the basis
But I
for doing it
charted-
on minis. That's all it is.
No, yes,
Fuck it, I love it.
I charted
Solid.
everything on mini, so it's like it's so hard to rechart it on. Just go it on the mini.
I like it. I like it.
But for each contract, I have a very tight stop loss. It's around like 7 to 10 ticks with minimum 15 ticks profit.
Not bad.
Yeah, so I really do cut because it's a mini. I do make it a lot smaller as compared to other like NQ also.
Right. I'm learning that you can't be trading large amounts on small accounts anymore.
Nah.
Just
Yeah.
feel like I'm not in the play enough. But hey, you know what? It is what it is. So today was an interesting day. I took my trades before market open. Since, as y'all know, I'm pretty much nocturnal at this point, I was trading the Asia session. Yeah, our favorite one, right? So let's start off on the daily chart. Yeah, I was not expecting this, any of this. This was a no-no. I was not expecting this. I'm glad we had this because now I only see downside. Like, this was horrific. I was only expecting consequent encroachment, but you know what? We said screw it. Let's just go all the way up. So why not, right? Right. But I was expecting this to come all the way back down, which I believe we are going to see. So with that being said, go down to the 1 hour. Yeah, as you can see, I played in a very small box today, but played mainly within this order block. But as you can see, we've created several fair value gaps. Yes, we have. And this 1 hour fair value gap that we did have, it got destroyed. Absolutely annihilated. Then just used it as support as well. So perfect time for resistance to turn support. And that's what we saw today. Now I am ready for this thing to drop straight through as the past couple days just never existed. But I was initially bearish on options. I took puts. I was very dumb. I understand. But it went with my bias. You know, we had the Judas swing, and it came down. I thought, oh, okay, cool. We're done. Nah. No shot. Let's go ahead and go down to the 5 minute. So this is where I took my first trade at 3 in the morning Eastern. So why did I get in here? Well, we came down into the fair value gap right down here and closed it out. Right, we wicked down into it. The body closed the fair value gap. I took it to the top, seeing as though we had based here. So we need to go up, come down. I waited for a lower low to be created. Did not happen. Therefore, allowed it to go up. Saw this volume imbalance, wanted that to get taken before I got into the trade. So waited for the retracement. Then we got in and we rode it all the way up to consequent encroachment. So outside of that, I could have held on longer. I really could have for another, what, 20 bars? Could have. But decided not to. I think I took a nap at this time, and I woke up. I'm like, oh my God, look at this beautiful setup. I saw a retracement reach back up into the fair value gap, wanting to grab the breaker. Actually did, right at the bottom here. So took this all the way down, and then saw the immediate rebalance, hit the reverse button, and off we went. And this was my biggest play for around $6,500. But I was in for 10 minis. But 10 minis for almost 40 bars is quite a bit of change. Then I decided, you know what? We're good on the day. No need to keep going. Closed off my PA accounts. Opened up the eval accounts. That was a shit show. Because we're like, oh, we're going to come back up, retest, come down lower. Nope, sorry, off we go. So, took a trade here. Absolutely got destroyed. I said, okay, you know what? Bad luck. Really, really bad luck. Right? Right. Yeah. This was my target. Okay. I had such a lofty target and such a short stop loss. But this thing just ripped higher, higher, and higher. And I was like, oh, okay, cool. I was like, you know what? I'm gonna wait a minute. I'm gonna wait. Come up here. All right, cool. We've closed the fair value gap. You know what? Rinsed right above it. Came down. Great. Still the wrong one. Oh my goodness. So wanted to take this to the downside, and I'm like, okay, cool. We're gonna come back all the way down here. Not happening. Gotta stop that again. I'm like, all right, cool, fine. You know what? Maybe it's reaching for the highs. No problem. Come all the way up. See this nice little order block setup. I'm like, oh, we liquidated. Okay, so we're gonna go back up. Awesome. We come up. We go up. I'm like, oh, we liquidated. Sorry, we didn't actually. So after this loss here, I said, I'm done. I'm out. Today's not the day, and I'm not the one. Burned one eval account and said, all right, we're good. No more holding my feet to the fire on this one. It is not worth our time, nor our money, and time for us to get out. So, with all that being said, it was really time to go and get out.
Tight stop losses, right? Very tight.
Yeah. So I was a bit uneasy trading these accounts because I'm now used to trading the 100K and the 150K. These were 50K accounts. I haven't traded a 50K account in almost 5 months. So no, in about 3 months. Yeah, about 3 months. Because I like the extra buffer, and I like to let the play out. You know, and yeah, with a 50K account with the daily loss limit, just you know what? I'm good. No thanks. You can keep the daily loss limit to yourself. I want none of it. So that's how we do. That was the trades of today. Something I really did want to focus on is, you know, why did I continue to go back? Right? I was proven wrong here, and I was proven wrong here. Why would I continue to go back for a third? Right? So that was something that I wanted to work on, or that I am working on. Is okay. You know what? My bias might not have been right today. That's okay. The market has proven me wrong. It's time to go. It's time to walk away. It's time to get out of Dodge, because today is just not the day. I don't need to be in the market when price action is like this. That being said, that's really all I got. Tomorrow's CPI, some heavy hitting news. CPI and inflation. Yeah. Wow. All at once. Good Lord. That's all pre-market, dear God. Well, hey, you know what? If anyone wants to full port a eval, let me know.
I will be full porting a short position. Actually, no. So before news comes out, I'm gonna wait for the swing, then I'll full port. I'll counter.
I actually think this big ass candle here is left on purpose. I think
For
we're gonna see
tomorrow.
consequent encroachment of this, and then it's gonna fall out.
Put your shots there. Full
Yeah.
pot Tuesdays.
Full port
Yeah, luckily
Tuesday.
I will be in the office.
Luckily.
There's always a
Yeah.
limit order, Quan. Set a
Right.
limit order to the downside.
No shot. Absolutely not.
Quan hates limit orders.
Aye.
He does not fuck with limit orders.
Oh yeah, I
He needs,
do.
he needs the reverse button.
Nah, man.
Hey.
I gotta
Oh my god.
get rid of that thing.
Dude, and everything comes out at the exact same time, too. Sheesh.
Account is gone in about 20 seconds, regardless of what side you play.
Boom, boom. Unless you use the reverse button wisely.
You can't. It's
Instant
gonna be
pass.
instantaneous.
It's too fast. Too fast. Because if you, let's say, for example, it takes off and you put, let's say, cost, right? You went in long. And then by the time you went in long, if it took off in long, it probably dipped and it caught you like at the bottom instead.
Damn.
Yeah, like it never catches you at the right location. Even on a limit order, it skips for a bit. Or sometimes it wouldn't even grab your limit order.
Yeah.
You'll miss it.
Well, but because it's too fast, is it?
Yeah, it's just too fast.
Oh damn.
But
It's alright.
It's a lot.
I
It's
d-
just a
I
lot.
doubt I'll have time tonight to go in on the market.
Oh yeah.
Yeah. It's a
It's
it's
like,
a
I
crap
can
trip
avoid it.
back home. I literally am running around every day trying to pack my stuff, do settle stuff. Yeah.
Jesus.
So I'm not even trading the Asian market. Smart me thought I had time to gym because I was home. Nope.
You thought, bud. You thought. It's nice to have dreams, right?
Yeah.
Yep.
Yes.
But-
Sometimes.
Yeah, that's all I have at the moment. Guys, yeah, do y'all have any questions, comments, concerns, thoughts on today?
I think Jay did a wonderful thing walking away real quick. Very respectable way for him to just leave after his daily stop limit
It was
has been
hard,
reached.
very hard.
Yeah,
Yeah.
but he walked away. That was impressive. So I give him props.
Yeah, that's
Very
the
early
hardest
on in the
thing.
morning. Yep.
Yep.
Appreciate it,
Yep.
appreciate it.
Yeah.
Trust me.
In
That
Doctor's
is-
book, white and green is good.
Yeah, that is the hardest thing to do is to walk away.
It really- And
Those
then,
who can walk away, look, like that's a lot of willpower. All right, that's
you're already
discipline.
ahead.
Yeah.
Then I chased the green for the, I believe. It was
Yes.
green today. So let's hopefully end up with another green day tomorrow if you do trade.
Yeah, obviously I'm gonna do tomorrow trade.
Yeah.
See. Trying to get
Nice.
as close as possible to $3,000 so I can start my PA.
And you're trading with 4 micros, 5, 6? How many? What are you trading
Start with 2.
With 2? Okay, that's not bad. And you're still making over $100 with 2? Not bad.
Yeah.
That's
Start with two.
insane.
Yeah, that's pretty good.
Because
Yeah,
I
'cause-
still don't like, because I just started trading like a couple of weeks ago the futures. So I'm still kind of learning. So I'm just gonna always start with 2.
Yeah, it's not bad. How you liking it compared to options?
Yeah, it's good. It's good. Because
Like-
it gives you more time to stay in the trade because of the Greeks. So if the trades won't be in your place, but if in the whole the choppiness, you still be in the trade if your stops don't hit. But if you were in the option, then your Greeks might kill you. So you probably get out of trade. And then the thing with the averaging I used to do with the options, and then so the move go against you, I did average, and then when it come back, it has to come back with more force and more liquidity, like the volume and the stuff. That way
Yeah.
you can get more like the price what you are average before. So that things I don't have to worry about here. So that's pretty good.
Yeah. Like
Oh,
the
yeah.
past couple weeks for options, if you did not catch the initial move, it's done for the entire day.
Yeah.
Because
And
the
then
rest
that's
of the day
what
is like a
things
slow
have
chop.
month last month, because I was due to my scheduling sometime that I can't able to sit with the chart all the time. So it was on the live market, I was seeing that it's forming, it's come under my strategy, but then it was whole time there was all the choppiness. So I kind of stuck in there more. And then probably like first 30 minutes of the day, like market started at 9:30, the stock market, and then if it made like very massive move in like half an hour, so probably missed the entries over that time, and then kind of pretty afraid to enter in the trade. And then in the option, it's good that if you catch a small move, you kind of still up at least 100 $150, so that's good.
Right. That's absolutely right. I mean, there's only so much you can do with options and not get stopped out constantly just because of time.
Yeah.
With futures, you have so much more time, but you also have a lot of time, or the amount or the time that it takes for a trade to go against you is very short.
Well, sandpaper.
Yeah.
Makes sense.
Fantastic comment. With options, absolutely.
And then I would never been approved with the accounts with the options, so I kind of have to play with my own money. So
Yeah.
that's
Thank you,
a good thing
boss.
for the option.
All right.
Yeah, dude. Just the fact that you can stay away from your own capital is what I really love.
Yeah.
Yep. Takes
mean-
a lot of emotion out of it.
Yeah, and at the end of the game, our goal is not to stay funded with a prop firm, right? We do want to trade with our own capital. But I think right now, when everybody's starting, this is the best route at the moment. I mean, we're all learning, right? So just fuck around with prop firm money, funded accounts, learn your strategy, be consistent. Once you have your stats, hey, then move on, right? So I trade with micros. The reason why is because I'm actually trying to open a broker with futures, as in so I can trade with live account, and I'm gonna trade with 4 micros as well. So I trade with 4 micros now. I'm gonna trade with 4 micros there. So that's my goal, right? Just to trade with the micros, same with the same quantity, not over leverage, nothing like that.
Ah, nice. You got ready for the payouts?
Yeah, just about there. Yeah, so I should be cashing out my first payout on this month actually. So I'm currently at 56,000 on one of my PA accounts, and I'm at 53,000 on the other.
Congrats, man.
Thank you. Thank you.
Fuck yeah, dude. Congrats.
So hopefully I can do that.
How long
But
you been trading? Like 6 months?
yeah, just 6 months.
That's pretty impressive, man.
Trading nothing but micros, I tell you that much. Yeah, my
Yeah.
first funded account that I got took me about 3 months to pass. Micros in total. And I was getting massive moves that I was getting 200, 250 ticks. Like my goal was always to get more ticks than the previous day. Right. So I was aiming for 50 ticks first trim, and then I was aiming for 100, then 150, right? Then I started adding another one, and then next thing you know, I was at 200. So I added another micro, and next thing you know, I was at 250. So now instead of me trimming at 50, I was trimming at 100 ticks, and I was aiming for 300, 350. So That's how it all started. So now I look for very specific moves. But you guys could ask Fantastic. I have always tried to hold, and that was my problem scalping. I tried scalping, and the reason why I can actually be profitable on scalping was because I kept holding. I never trimmed. I never took profit. That was my fuck up.
Hmm.
I have never had an issue holding. I have always had an issue not holding, taking profit. That's for the most part.
Yeah, same with me. As soon
So,
as I see a little bit green, I was like, oh, let me take it, let me take it. And then if I see a red, I keep letting the trade go red.
yeah, that's also a problem. See, I used to not have a stop loss.
Oh,
Yeah, I was going
that's
in
scary.
there full porting pretty much when I was trading options. I did not have a stop loss. As soon as the market opened, I looked at the trend. The trend looked bullish. I instantly go longs. If it went against me, I would average. Kept going. I
Yeah,
would average again.
the averaging in the
Yeah. And then I kept going that until one day. So I started with $100. I ended up at 6,000. And one day I ended up losing everything in one trade.
since I started like last month, I lost 900 on one trade and then 500 on the other. So I blow my account. Like I had $2,000 and then it was end up with $500. So I stopped trading the options.
Yeah. Yeah, it's rough sometimes, especially when it's your own money.
Yep, it's tough.
Oh yeah.
So I'm thinking probably if I reach somewhere around 1,000, then I can start trading probably like 4 or 6 micros. Is that good idea, right?
Yes.
Because I don't want to lose, like I don't want to start losing. That way my confidence probably go down. So I want to make a little bit on the fund, like the demo account. Then once at least I reach the 1,000, then I have more room probably to put a stop loss for like 4 or 6 contracts for the micros.
We'll put it this way: your stop loss is always going to be the same, 2,500, right? For the most part. The only difference here is that, let's say, for example, if you went up to 51,000 and then you lost 500, then tomorrow it's not going to be a $2,500 stop loss, it's going to be a $2,000 stop loss, right? Because
Yep.
you already reached to 51,000. So that's the only problem. But what you should figure out is how much are you willing to lose per day? So Jay has a $500 daily limit, right? As soon as he hits that, he bounces. No questions asked. So your question is the question you're supposed to ask yourself is like, if you're allowed to lose $500 a day, how many trades are you allowed to take? So let's say, for example, you say, you know what, I'm allowed to take about 2 trades maximum. So then you put yourself at a risk of $250 per trade. That way, if you lose 2 losses back to back, you take the daily loss limit that you went ahead and put for yourself, and then you walk away, right? So that's how you should see is put yourself a limit, daily loss that you're gonna allow yourself to lose, and then based on your stop loss, put the amount of contracts that will allow you to lose that amount. So don't focus on amount of contracts, focus on amount that you're willing to lose.
Got it.
You get what I mean? Because sometimes a stop loss, let's say, for example, I specifically use take my entry, my stop loss off of one candle. Everything's related to one candle specifically, right? So I enter consequent encroachment off of fair value gap, and then I do 5 to 10 ticks above the fair value gap's top weight candle or the bottom weight candle, depending if I'm going long or short. So sometimes these ranges be 40, 20 tick stop loss, but sometimes they can go up to 100, 150 because I'm playing off of one specific candle. So what I have adapted was if I'm willing to lose $200 per trade, but I want to be able to go in with more than 4 micros, then I'll hedge against myself. That way, when as price action goes against myself, it's actually getting my limit orders at a cheaper price, and I'm able to go in with much more contracts at the same stop loss limit that I'm letting myself lose, and at the same time get an average in of better pricing at the end. So that's how I counter myself. So there's like just little details right there that you could also pay attention as well.
So let me ask you like one thing, like in like today's market, when there is one candle green, the next one is red. So once you hit like your first profit target, and then the candle, like, so you next thing you move your stop loss at the break even, or you keep the stop loss at the same originally when you enter the trade?
So the rule I have, my specific rule is as soon as I hit 50 ticks, I trim, stop loss, or break even. But not until that first trim gets done. So let's say, for example, if I make it to 40 ticks and it goes back down to break even and then back to -20, my stop loss stays the same until I trim. As soon as I trim, I'll take the risk of getting stopped out at break even. And the reason I do this is because out of all the trades I took back testing, very minimal amounts of trades were actually stopped out at break even. But what I've noticed is that after 50 ticks, which means pretty much about $10, 10 bars, session either takes off in the same direction or it comes back and then it wicks you out and goes the other way around. So that's what I noticed just out of repetition. I noticed that after 50 ticks, it's either going to stay where it belongs or it's going to range in between there. And it's enough room for a stop loss at break even not to wick me out. And I always leave it like 5 ticks away in profit.
So once you take your 50 ticks and then the next candle came at break even and then stop you out at break even, and then the price action is still in the fair value gap, do you still enter again or no?
Nope, I let it go. That trade is done for me. So here, I'll go ahead and show you the screen.
That happened with me today. That's why I'm asking, because it was like I I trim my first contract, and then I was about to put my stop loss at the break even, but then the price suddenly came at like that. So I leave it at the original stops and then kind of waited like 4 or 5 minutes and keep at a couple more contracts. So that's what I did today.
I see.
Because
Yeah.
the price against today is like just go down and come back, go down. So
No, that makes sense. But that's the reason why I do that as well. So watch this. So where was it at? We went ahead and we entered here early in the morning, right? We got waked in on this candle, which means it went against us. But as it was going against myself, as it was going against us, and my stop loss was at here at consequent encroachment, I had limit orders here, 2 contracts, and I had 1 contract here, and then I had another contract here. So I had a total of 4 micros, right? But as it went against me, it actually put my break even or somewhere around here. So once I saw 50 ticks profit, let's say right here was 50 ticks. Once I saw price action here, I take my stop loss automatically goes to break even. So I don't care how far this thing goes down. I take profit at 50, then I take profit at 100, and then I take profit at 150. As you can see, it never made it to 150. It went down to 140. So just because it made it to 140, I do not trim because I really wanted 150. So I automatically get stopped out at break even. So I lose all of this profit just because that's the rule I have. Now, there's another rule where I can go ahead as soon as I trim at 100, I can move my stop loss to 50 and conserve more profit. But I've noticed that price action tends to come back to this specific area if it wants to continue going lower. So I now instead take the full loss on runners and just get out at break even once that happens, right? But my rule is trim at 50, stop loss at break even. Anything after that, I do not care. I'm already at a risk-free trade, right? And then from there, I move on. And the reason why I do 50 is because in one mini, which I hope to do in the future, is $250, right? And then if I'm trading with 4 minis, 250, then it's gonna be 500. So I'm already at 750. Then at 150 ticks, it's gonna be 750, and that puts me at 1,500 just with 3 contracts. Doing this specific strategy here, right? So my goal is to always be consistent at above 100 ticks in every trade. That's my goal. If I can make it to 100 trades every day, I can manage taking 1 mini trades a day and be enough to support myself doing this a full-time job. So that's the reason why I've been really, really focused on this specific strategy, because it's been very consistent. Now, can we be consistently going above 100 ticks every day? And the answer to that, pretty much 80 to 85% of the times, we are always above 100 ticks for the most part. We took this trade here. It was above 100. We also took this trade here. I ended up taking a trade here, and the reason why I actually did not receive 100, which it did go to 100 for a consequent approachment, was because I took one contract here, one mini contract, and I actually entered another set when it reversed over here. So my average was somewhere around here, and I never saw the full 100. I saw 94 to be exact, which this is 96. But in reality, if I would have entered a consequent encroachment, I should have taken my last final contract at 100 ticks. But due to the fact that I had my average somewhere down here, it actually affected the way I trimmed today. So I stopped out, right? So those are just little details that I have implemented into my strategy, pretty much add-ons.
You put limit order for every 50 ticks, or just
Yep.
place them on? Okay.
Every 50 ticks, as soon as I see 50, I either trim through here or I put a limit order.
Okay.
Sometimes it's 50 ticks or the break of structure, but for the most part, the break of structure is always above 50, so I always do 50.
Gotcha.
Now, if I see that the price action is dying with so much momentum, sometimes I stay away and I trim at a higher number. But at that point, I mean, if I am paying attention, I'll do that. If I am not paying attention, I just put my TP, put wherever I want it, my stop loss wherever I want it, and then I walk away from the computer. And then hopefully I come back green, you know?
Hopefully, yeah. Hopefully.
Yeah, a lot of my trades, sometimes when I get in the morning, I have to drop off the kids. So there are times where I am in trades and I'm not even monitoring them. Yeah, but just find little details like that. Once you're entering your strategy, when are you trimming? Backtest it, circle all the trades that you lost, circle all the trades that you would have been stopped out. Circle all the trades that came back to your entry point. How many times did it come back before they took off? So that's another thing to look at. So for example, okay, let's say for example, let's see. Let's say this was a fair value gap here, for example, right? Let's go ahead and pay attention. And then this is very important because I actually use a different strategy off the 1 hour, which I call the healthy order block. And this is something that I learned how to adapt with. Let's say this was a fair value gap here, for example, or an order block or whatever. And you want it cost. How many times did it enter break even here or your entry point and went against you? So you count 1, 2, 3, went back to the green, 4, 5, 6, 7. 7 times before it actually hit your 2-to-1 ratio, for example, right? So circle all of these trades that had these amounts. And out of 20 trades, if you know that 15 of those trades came back down to your negative, went green, came back down to your red, went back up green, then came back down red, circle them. If there's 15, at least out of 20 trades, there's 10 trades or more than 50% of them, then maybe keep your stop loss at the original position and let your 2-to-1 ratio hit. And the reason why I say this is because there's a lot of times that I've seen it where price action normally tends to chop, and if you enter a bit earlier and it just comes out with momentum, it has to accumulate before it takes off again, right? So I've noticed that, and the reason why I noticed this a lot is because I play the other one off the 1 hour. So all my entries are based off the 1 hour. Stop loss is based off the 1 hour frequency. Everything's based off the 1 hour. So since I play off the 1 hour, I have to go ahead and ignore every single time it goes green, red, green, red, green, red every single time. Because since I'm off the 1 hour, it's not a sniper entry. It's more of a median range entry. And I just expect price action to at least hit consequent encroachment from wherever it is at, and then from there take off, right? So my stop loss is always the same. My TP is always 2-to-1 ratio, and my stop loss never gets moved when I play that strategy. So there's times where it goes green, it doesn't hit my TP, comes back down, and I get worked out on a loss. But the reason why I do it that way is because the strategy out of 50 trades, it's 38 trades consistent. So my losses are not as bad as my winners. But everything's 2-to-1, everything's same stop loss, everything, the entry is always the same. Exactly. Everything is very, very symmetrical in a way. So those are just things that I always pay attention to. When you're entering, if you have trades like this, circle it, count them, look back into them. Can you avoid entering too soon? Can you not? Little details like that are something that I recommend you asking yourself and answering them.
All right.
That's pretty much what I got. I mean, there's other stuff as well, but those are like the main ones. I used to have it. I don't have the back test no more. I deleted it. But all of these charts used to be full back testing of one specific strategy, like very, very simple strategy. Marked. I had X's, I had circles, I had squares, I had everything. Everything. If as soon as I see the trade, I could tell you what was wrong with the trade, what was the issue, what issues that it had with other trades. Like I could tell you so much information out of one trade just because of all the little marks I left behind. And I saw that out of 50 trades, 20 of them had the same issue because of one thing, and then out of those 20 trades, 10 of them were also similar because of the different areas, you know. So if you can't find those little details, it's going to affect you later on, right? But if you can find those details, you can start ignoring a lot of them when you're actually trading. Because a lot of things that will happen with this is that when we're entering here on the 15-minute or on the 5-minute, we then drop down, especially when we're entering on the 1-minute. We see that, let's say, for example, we know that we wanted to go longs, but then we see that this thing goes up, then it dies with momentum, we get out of the trade. Next thing you know, it was a profitable trade. So this affects us a lot. So instead of being so emotionally attached to all of this chop here before it actually takes off to, let's say you wanted something up here, try to avoid looking at all of this crap and just know that price action needs to go up here. However, why will it counter you? Figure out why would it counter you. So if you can find out what's more valuable down here rather than up here, then maybe at that point you should not be in the trade. But if you cannot figure out that this liquidity is more valuable than this liquidity up here, then don't worry about it. Just know that, hey, it is a possibility of me losing $100 because there is a liquidity here. But I believe that this buy side liquidity is much more liquidity. So take the trade. Trust your analysis and take the risk. If it goes green, red, green, red, green, red, do not move your stop loss. Your point here of entering the trade was that you were going to tackle this guy or lose $100. So that's exactly what I do. I rather take the loss than eliminating it early. Reason why is because when I eliminate early, for the most part, it does take out in the direction. And then instead of helping yourself, you actually hurt yourself in the end. So I'd rather take the loss than help myself, because then I regret everything at the very end of the day. And then it just makes me feel worse. If you guys kind of get what I mean.
Got you. Yep.
Toxic cycle of self-loathing. Yes.
Yeah. Yeah, and I
used to
mean
do that before.
and there's trades that you can avoid. I mean, when you're inside, you look at things like, for example, I use ES as a confluence with NQ. There's times where I have to just go back to ES and I see that ES is not doing what I want to, and I'll just get out of the trade. But if you already understand that, then there's no need for you to be upset after the trade does go in your direction, because you understand that the rule was if ES is not going in the direction that you wanted to with NQ and they're not correlating, if there's a huge divergence, then if the divergence is expected, it's okay. But if that divergence was not expected on that entry point, then maybe there's something wrong and just get out of the trade, take out the loss, and you just risked losing more, right? So you just didn't lose as much as you wanted to. So those are just little details like that, but stuff like that are just something that we just experience, I guess.
Yeah.
I mean, I have not been trading for a long time, so I definitely do not have a lot of experience, but I can assure you that my notebook is full of different details like that, because that's exactly what I look for every single time I back test.
Yeah, it's hard when like you are trying to figure out why was I wrong, when sometimes you were wrong just because that's how it was. It wasn't anything you did.
Yeah,
Like,
I call those bad luck.
yeah, like a part of this is you are going to be wrong even when you were 100% right. Right? Like, make that make sense. It doesn't, but that's how trading is. You could be 100% right, like today. Okay? We were right. But price action was so wrong. Therefore, we couldn't do anything because we had nothing that we could have done at that point. Like there wasn't anything we could have done. Right? So at that point, it's just you got to figure it out and be okay with that. Say, you know what? It happened. Shit happens. Like today, it got stopped out 3 times. I'm like, you know what? Why am I doing this? The trend has proven me wrong. I don't need to be here. I don't need to be doing this. This is not for me. Then like, damn, like I need to get out of this.
Hmm.
So that was my cue to leave. Some people don't get that until they lose a lot. And then they're like, oh my God, I've lost so much. I can't do that anymore. So, time. It just takes time.
Yep. Takes time.
Oh yeah. Well, that's
Cool.
what I have for today.
Same. Any final comments, questions, concerns?
Nope. Not for today. That's all I had.
You have anything, Jerry?
Jay?
Nope. I don't think he does.
I'll take that as a resounding no.
I couldn't
Ah.
find the damn button. My bad.
There we go. Look at that.
No,
All
I'm
peppy
good.
step.
Well, I tried to pick up my phone and then it slid and then it went back to the home screen and I was looking for the new.
That's all good. It's all good. So yeah, let's see, we got that covered. And so, let's see what else do we need. And I think we're all good there. You know what? I think we'll end it here. And until next time, guys, I will catch y'all later. Thank y'all for joining tonight. And we'll do this again.
Yeah.
All right.
Thanks
Thanks
so
much,
much.
Take care,
gentlemen.
y'all.
Bye bye.